Greetings everyone, welcome aboard. Joseph James here, schooltrade.com, Sideways Markets. It's a short week, Thursday morning. That feels like a Tuesday, or maybe it's a Wednesday. Nope, Thursday morning, June 2nd, 2011. We're just breaking into this month of June, guys. May, June, July, first 2 weeks of August have been pretty darn good for us. Here's your live and recap. Now, what happened this morning? Again, Thursday mornings usually mean jobless claims. And usually Thursday mornings, we got jobs, gets the market going at 8:30 this morning, but this morning we had a lot more to worry about. Now remember, we had a holiday Monday morning. When a Monday's a holiday, it'll push everything back one day, sometimes even worse, right? Like today, we got news from Monday and Tuesday pushed into, of course, Thursday. News from Wednesday was today as well. So Thursday morning, we usually get jobless claims. We had jobless claims this morning, but on our minds today was crude inventories. Usually Wednesdays have crude inventories. We talked about this yesterday, guys. We talked about yesterday, the cause of the low volume yesterday was because the traders on crude were waiting for Thursday. But we thought this morning we had some concerns. We expected low volume today on crude. Why? Because traders are not used to trading crude inventories on Thursday morning. We're all creatures of habit. If my specialty is day trading crude oil, I look forward to Wednesdays because of news. If that news shows up on Thursday, I'm now out of my routine. I'm out of my element, right? I'm out of my habit. So that was one of the reasons why we expected low volume. Another reason why was because we have non-farm payrolls tomorrow. And so we assumed the big daddy of all news events, right? That's what non-farm payrolls are. The biggest news event we see is happening tomorrow morning. So we expected that would also be potential for some low volume. So we knew today we had a really potential for a huge day today, right? Lots of news. And we talked about this yesterday. Remember yesterday we talked about how today might be that day where traders have to trade? In my opinion, if I'm a professional money manager and I've got $100 billion under management, Monday was a holiday, Tuesday I'm traveling, Wednesday I'm getting back into the rhythm of things, but Thursday I have to get whatever trades I have scheduled for non-farm payrolls must be done today. So we had these two sides of the coin. We said on one side, people might really be waiting and based upon analysis paralysis, waiting for tomorrow's non-farm payroll, it might be quiet. But then we also said the other side of this coin says the major money managers, they're not going to have a chance tomorrow morning to trade before non-farm payrolls. So therefore today will be their only time to finesse those big block orders into the market without giving away, right, their goal or their objective tomorrow morning before the news. Remember, tomorrow morning, all the major money managers cannot participate in that news. It'll be too illiquid. They're going to have to get in earlier or get in much later. So if I'm a major money manager and I have an opinion on where price is going, tomorrow it's too late. Today is the day. So that was the other side of the coin. We may have, out of necessity, a lot of volume, almost like a wacky Wednesday. And boy, it was definitely wacky, but it took a little bit to get started today. So we began our morning, 8 o'clock, what do we see? Very slow, very sloppy. We began digging into what we were expecting to happen today. And we realized we expected crude to drop. Now, there were quite a few reasons why we expected crude to drop. What were they? Well, first of all, we had already seen price come down off the highs. We had already seen price fall off the top of the wedge. We had already seen a head and shoulders pattern. We knew the BMT was well below us, but that really wasn't the reason. Why do we expect crude to sell off? We talked about this last week. The manufacturing sector in the United States has been well documented in a spiral down. What did we see 2 weeks ago? Empire State Manufacturing, Philly Fed Manufacturing, what was the other one? In Virginia, Richmond Fed Manufacturing. 3 cities in the U.S., all manufacturing dropping. We see factory orders dropping. We see everything in the manufacturing sector bombs away. Now, what does that mean? If the manufacturing sector slows down, that means they're consuming what? Less natural resources. Fewer factories, producing fewer widgets, shipping those widgets across the planet using crude oil in their shipping trucks, in their planes, right, on their trains. Another market will be nat gas, right? Nat gas will be another market heavily affected by a slowdown in the manufacturing sector in the U.S. Now, this told us manufacturing sector slowing down. That was only one piece of the puzzle. What was the other piece? The other piece was we had just come off all-time highs. Now think about this. When the market hits all-time highs in crude, what happens? Business owners, right, like you and I, we put plans of driving our trucks on hold. We stop growing our business that relies on crude oil. So now, rewind 2 weeks ago. 2 weeks ago, what do we get? New highs on crude. 115, right? Huge highs on crude. And what do you think that did in the Middle East? They said, aha, let's keep the production going. So they increased production. We're making all this money on this crude oil. Let's make some more. But sure enough, what happens here in the U.S.? Business owners say, I can't afford to operate my business anymore. Crude oil is at all-time highs. I'm not planning my company trip, right? Driving up and down the coast. I'm not planning our trip around the world for vacation with my wife and I, whatever the scenario is. And I'm definitely not opening up that brand new plant in Alabama. So business owners say, I'm done, right? Put everything on hold. So meanwhile, right, in the Middle East, you've got them counting the money, right? We're making all this money. Crude's going up. Let's make more. Meanwhile, here in the U.S., and we assume all over the world, they're saying, you're killing us right now. We can't afford to do business this way. We're going to stop operating. What does that happen? What happens with that? All of a sudden now, supply is cranking, but demand is tumbling. Not only is demand tumbling because of the fundamental reasons, right? Not only is demand tumbling because the price was too high, right? Because now there's too much supply in the market. Demand is a small variable. Too much supply doesn't matter how much demand is out there. But then we throw in the fact that we have the manufacturing sector tumbling. So now every major money manager now knows we can almost predict what's going to happen. Inventories will come out higher, right? I would have bet $1 million today inventories would have been twice as high as they expected, and it almost was. So we pretty much knew exactly what's going to happen for a couple reasons. All-time highs, supply and demand are way off, and the manufacturing sector is tumbling. We found a bearish channel. All signs point right to short. But guys, I'll tell you one thing right now. If everybody knows about something, you better be careful. Just like, why don't we sell the low of day? Because everyone knows it's there. Very good example of that, right? Wait to see a new lower low, then sell. This is a great example of a trade here this morning where everyone knew what was going on. And because of that, we're scared. Well, not scared, but one of the things we're paying attention to is this price may have already built that into the price. Okay, when we dropped down to 100 earlier this week, okay, that may have priced that move already in. So we find ourselves in the middle of the wedge, in the middle of the range on crude today. And my exact words were, guys, we don't need a crystal ball to know what's going to happen. Price will drop. But remember, after the news comes out, I've got to be careful not to let my emotions and my opinions get into the market for me. So I said, let's really be careful. Wait until we get a new lower low. Wait until we really prove to ourselves the sellers are here and they're selling this thing off. I anticipated a breakdown and then one of the biggest moves back up. That's what I thought would happen. Wasn't what happened, but that was, again, if you're not preparing for the worst, you're going to get the worst. So we want to prepare for what might be the worst case scenario and also what might be the best case scenario. Now, we got the best case scenario and we were ready for it. But this was something that was a very interesting situation this morning where it was so easy to see where it was going to go. That's what made it so difficult to be confident in it. Okay? If everybody knows what's going on, guys, that means there's no element of surprise. There'll be people waiting to take your money. All right, guys? So that was the first thing we talked about this morning. We went through the entire morning prep and we dug right into crude oil and we said, this is easy. Dollar rising, crude should be falling. This should be easy to see a sell-off. But beware the fake out breakouts. So what do we see? Crude, bear channel. Dollar, rising. We also had a wedge on gold. Now those are three price patterns that really make sense to us. On gold we had a wedge. But it took a while to break out of that wedge. It was a very narrow wedge. By 10:30 on gold, we had broken below the lows, and this is an example of where everything happened at once. We waited from 8 o'clock, 9 o'clock, 10 o'clock, nothing's going on. And then sure enough, at 10:30, everything starts moving. I couldn't trade crude until 11 o'clock, so I waited until after the 11 o'clock news on crude, and boy, our patience paid off. 10:30, gold drops to new lower lows. We sell retracements all the way down to those key levels of support we found at 8 o'clock. Don't forget, we began in a very narrow wedge. There's my wedge. So we find ourselves up top here, guys, 7:45, 8 o'clock, right, in a very narrow wedge. Now, we talked about this yesterday. Whenever you have a sideways range and you see a new lower low that fails, even though I want to buy, for example, here on gold, we get a new lower low and it fails and comes right back up. Even though I want to buy that failure, okay, I'm not going to buy at the lows. I'm going to buy the reversal as price comes up. Inside day on gold, right, we weren't below the previous low of day down there, so I'm expecting it to hold inside the range. So, of course, I can buy here. I can easily buy at that support. But that's not the point. It was too slow at that time. This was a big clue from the sellers. Basically, when you get a sideways range and we expand out of that range, the direction of the expansion is where you should look to go next. In this case, a short scalp will allow me to buy those lows and bring price back up. But the big move, right, the swing traders, position traders, the long-term day traders, they're going to want to now use that as a clue from those sellers. So we're trading sideways inside that wedge. All of a sudden, bam, and price comes back up. Again, too slow to trade at that time, but that was a big heads up from the sellers. Now we know we might be in store for a move down. We had to wait for it though. We come down, right? New lower lows, and this is where, right? This is where, hold on, back up real quick here. We come down, make new lower lows, and look what happens. The buyers now try to push this thing back up. Remember, this is a big time bull channel. So the bull channel, this is the low of that bull channel. So what do you think is going to happen right there? We're going to see lots of support holding those lows. And remember, at this point, it's an inside day, so everyone knows to buy those lows. But this is where a little bit of feedback goes a long way. The market personality says we're trying to drop. That's the first clue. The second clue now is that they try to drop again. They make a new lower low, right? New lower low. The buyers now come in and try to push this thing up. And what happened was it was a big fist fight, and we watched it, right? They were trying to buy back up into this channel, but they fail. When they fail, I've got a specific level here. I've got to get below 37.2. 37.2 was the BMT on my 21 range chart. As long as I got below that level, I was good to go. So, of course, what happened here? We see new lower lows. I sell retracement on a 4-range entry. There's one. We then bounce me out one more time. Now, remember, this is another failure. Okay? Failure number 1, now failure number 2. Now, the failure number 2 tells me we've got to get this one now. Okay? If it failed once, it might be a fluke. It fails twice now. Buyers at the lows of the channel now fail twice. What does that tell me? Look out below. Once I get below that 37.2, I'm getting short here for a wave pattern short. At 10.25 on gold, the first trade goes +5, +10, +2. That's 10 plus 10 is 20, plus 2 is 22. So we break the channel. I forgot too, the dollar was rising at that time. Remember the sideways dollar? Well, at the support level, that's when the dollar started rising off support, which caused this whole price to tumble. Newer lower lows, and again, we're selling retracements. But remember, the big story here, though, came under the radar. We saw the buyers fail twice. I took the first trade short when the buyers failed, right? +5, +10, pretty much got bounced out. Then the second trade when the buyers failed, that was the big winner. Okay, it's almost like trying to knock down a wall, right? If you take a hammer to a wall once, you might just crack the wall open a little bit. But you take it a second time, right? Now you'll break right through that wall. That's a good example of how that happened here today on the gold.